What's up, everyone? It's Caddy with Money Vesting. So markets here are simply trading sideways on the day, not really going anywhere, but in that range and consolidating for the day. The Nasdaq, S&P, and the Dow Jones were all flat on the day in anticipation of what is going to happen later this week. And that's usually what we see in terms of price action. The markets more or less trade sideways when there's a big day coming up. And of course, this week we've got the Fed on Wednesday, May 3rd. Jerome Powell is going to deliver that FOMC press conference, and not to mention the interest rate hike and the guidance for the future as well. So everyone's going to be tuned in for what Jerome Powell has to say with respect to the interest rates path and of course the current hike that we are all expecting for another 25 basis points. And not to mention, of course, JP Morgan also buying First Republic Bank for pennies on the dollar, getting substantial amount of assets being deposited into that bank. I did a video on that earlier yesterday, so make sure that you do check that out if you haven't already. But as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. The link to our Discord and Patreon is going to be down below. It's the first week of the month, and it's usually the best time to join. So if you want to take advantage of that, link's going to be down below. And you'll also get access to all the private live streams. We've been doing them Monday, Wednesday, Friday. And not to mention all the private videos and the alerts, including day trading alerts, swing trading options, and all the other investing alerts as well. Speaking of day trading alerts, we did take advantage of DPST. So we traded this twice intraday today and scalping 1.5 close to 2%. I know some members even scalped as much as 3% on the day today trading this. Our first entry was at around, I believe, 650. And we were able to take advantage of this momentum back up to 688, 690. And the second entry was after this entire sell-off. So you can see that this right here was the entire sell-off of 7.5%. And this was around over here at around 11:45, 12 p.m. Eastern when we were able to scalp this entire move back up of over 4%. Of course, we didn't capture the entire move. I only was able to make less than 1% on that scalp, but a lot of members did end up making a little bit over 2% because we've got a rule in our community that you always sell 5 to 10 minutes after I do, because my exits are almost always a little bit too early, and the stock ends up rallying even more after I'm out. So again, link's going to be down below if you're interested in joining us. The US could hit the debt ceiling by June 1st, much sooner than expected, Yellen warned. So I actually did a video on this last month, or might be the month before that, talking about the US debt ceiling and how every single time the US hits that debt ceiling, you know, almost always we've seen, well, pretty much always we've seen the debt ceiling getting raised or suspended. And right now we are, you know, getting very close to that X date. And when there's going to be some extraordinary measures starting soon, you can see government shutdowns between now and the next couple months here. So Treasury Secretary Janet Yellen on Monday warned that the United States may run out of measure to pay its debt obligations by June 1st, earlier than the government and Wall Street had been expecting. And in a letter to House Speaker Kevin McCarthy, Yellen said the new data on tax receipts forced the department to move up its estimate of when the Treasury Department will be unable to continue to satisfy all the government's obligations to potentially as early as June 1st if Congress doesn't raise or suspend the debt limit before then. This date is earlier than Wall Street economists were expecting. Goldman Sachs' latest estimate this week put the deadline at some point in late July. And though the bank's economists acknowledged that the weaker than expected tax receipts could advance that timeline as well. So, you know, when we talk about not living paycheck to paycheck, the United States is a prime example of living literally paycheck to paycheck. And it's dependent on the tax receipts from the current or last calendar year, right? So, I mean, if tax receipts are weak, we're seeing the timeline getting moved up. And this is what that's going to do is really put pressure on both the dollar index and the bond market. And the reason for that is simply because if June 1st is indeed the date, as early as June 1st, we're going to run out of our measures to obligation to kind of service our financial obligations, that creates a big problem, a big concern, right? Because between now and that X date, we've only got 8 legislative meetings. I think I read it somewhere over here, but we've only got 8 legislative meetings where both the congressional houses are gonna, the Democrats and the Republicans are gonna meet together to make that decision. And if there is any delays, there is going to be government shutdowns. There's going to be a re-rating potentially of the US credit rating, and which obviously is going to put a lot of impact, a lot of pressure on the bond market, because then the US government debt can be perceived as a slightly more risky than before. thereby pushing yields higher, and that's obviously not going to be great for stocks. So that's something for us to pay attention to, because this is gonna continue to be a bigger problem as we progress through May, and of course going into June and July, we're gonna find out what ends up happening. But the chances are, most likely we're gonna see that debt limit be raised once again, as it always has. So I'm not super concerned, but that's just something that we all need to pay attention to. The First Republic deal has come at a crucial point for the markets and the economy. So JP Morgan obviously stepping in, well, not really stepping in, but getting a ton of assets. I think over $90 billion worth of deposits, and that's including the $30 billion that they and the other large banks put into the bank in the first place. So first kill the bank and then buy it for pennies on the dollar. Seems like a great strategy. And FDIC, of course, absorbing part of those losses that FRC has on their books. And not to mention, they're also extending a $50 billion credit line to JP Morgan as well as part of this deal. So this right here is the current May 3rd Fed funds futures probability. So for 93% now that we're going to see a 25 basis point hike in May on May 3rd here. And this right here is going to be the next several months. So the market's expecting 3 to 4 months of consistent pause. In other words, another 25 in May, and then just pause all the way through September, November, and then 7 to 8 cuts priced in for the Fed funds futures, getting all the way down to 3 to 3.25%. Now we're really going to be focusing on whether this discrepancy is aligned or it is going to continue to be working in different directions, meaning the Federal Reserve is telling us one thing, the market's pricing in another thing, right? So this discrepancy is still there, and eventually it will resolve itself, because either the Federal Reserve will pave the way for these Fed cuts and they will actually start doing them, or they're going to stick to their higher terminal rate and they're not going to cut rates, which is what Jerome Powell has told us, and the market will have to reprice and readjust to the reality of that situation. So that is something that our focus also needs to be in, because right now, like I said, there is discrepancy and that needs to be resolved sooner or later. This right here is the market. So Dow Jones down, S&P flat, NASDAQ also moving sideways, so not a lot of movement intraday. We've got 1,800 stocks between 0 and 2% down, and 1,700 stocks that were up between 0 and 2%. So very, very balanced, very, very flat day for the market. So Amazon here selling off 3.2%. Exxon and Chevron will also lower. But of course, we did have Nvidia absolutely roaring, charging up over 4% on the day. So moving higher, and of course, taking the entire semiconductors with it. AMD was up. We got Broadcom. We had NXPI pushing higher on semiconductor. Micron and Intel were slightly lower, but Nvidia absolutely crushing it yet again. I think it was trading back over $285, $290. We'll take a look at that in just a minute. But healthcare pushing higher. We did have healthcare plans, industrials, pharmaceuticals, consumer defensives, and staples, as well as banks pushing higher on the day. But really, it was just energy, technology, cyclicals all pulling back. So very, very flat day for the markets here. So over the last 1 week, again, we've got some sectors pushing up, some sectors pulling back. In the last 1 month, we've got healthcare, comm services, defensives, utilities, financials, all of them pushing higher here on the month. And finally, we got volatility. Oats, wheat prices pushing up, with orange juice, lean hog, sugar, and lumber prices pulling back. Bitcoin was struggling at just over 28,000, and Ethereum just at over 1,800 on the day. So going back over to crude oil, we are seeing it come down to that support at $73, $74 a barrel. So that really is where the focus needs to be from a technical support standpoint for crude oil. And we'll see if it actually breaks down below this level or if it gets bounced back up. $81 is going to be that next resistance for crude. And Ethereum, once again, coming back down, 1,800. Support level is going to stay put at $1,740, $1,700, with a resistance all the way up to $2,100 for Ethereum. So that's going to be that level to watch. And Bitcoin, of course, we've got that trading sideways for a long time. It's just been consolidating. 30,000 is going to be that resistance. We did see a pretty significant selling pressure, down almost 4%, and support level is going to stay put at $27,000 for Bitcoin. Now, talking about the volatility. So volatility here up over 1.9%. So seeing a little bit of momentum on the day, but still red candle on green day trading at just over 16. So still pretty low levels. And what's really interesting is that if you take a look at the NASDAQ index, right, where did we get rejected on the day? Almost perfectly over here. This is the area of consolidation that we have talked about. So doji candle on the day for the NASDAQ composite and just really struggling at that level at 12,260. So high for the day, 12,261. So we are perfectly getting tested at that level. And again, we see a little bit of a pullback from that support, from that resistance. Same thing with the S&P 500. So you can see like almost identical. Like we pretty much traded as much as 4186. We've got a resistance at 4182. So we are perfectly at that level. As soon as we got up to that level, sellers stepped in to bring us right back down to as low as 4167. And this is exactly the level where we have previously also gotten rejected here once, and over here, not to mention in the past once again as well. And talking about RSP, again, we were kind of, far away from that resistance. So that's the, equal weight index. That's just showing us the fact that this rally has been very much concentrated behind a lot of tech stocks. And this is going to be NDX, which is also suggesting with the doji candle today and a lot of indecision that the buying momentum for a lot of big tech stocks did slow down. In the last couple of days, it was very strong. We saw some very green candles here. NDX up 2.7%. And yes, Friday up over another 65 basis points. But today we saw a little bit of a doji candle, meaning or suggesting that we're seeing a bit of a consolidation, indecision, and sideways price action intraday for the market. So if you do end up breaking out for the NASDAQ, it's a lot of it is going to depend on, what happens on Wednesday with the Fed. But if you do end up breaking past this resistance, the next level really is going to be at 13,200. This right here is going to be that next level to watch for the NASDAQ composite. And for S&P 500, that's going to be sitting all the way up to 4,300. And we also did talk about QQQs in our private live streams. And if we do end up breaking out, 334 is going to be that next level. And that's where I would be a lot more interested in taking a short position on the NASDAQ from a swing trade perspective. But more details on that for our members later in the live stream on Wednesday. So talking about the S&P 500 first, again, we are still sitting inside this bear camp. So as you can see that we are inside this red rectangle, that's the bear camp that I just showed you guys in that white chart. But this is the area to really be focusing on. 4,200 is still that call wall, which we talked about in our previous video, where the call and put strikes are really high. The open interest is really high on S&P 500 at 4,200, and it's kind of leveled off, right? So 4,200, 4,100, and 4,000. So those three levels, those three strikes, have the highest amount of open interest for S&P 500. That's exactly why we're seeing a lot of consolidation sideways. And of course, the markets are mostly in that range for a very long time, since June, right? So it's almost been a year since the market have really not gone anywhere, but instead just traded sideways since May of last year. So really, it's been one full year of markets trading sideways. So resistance is going to stay put inside that red rectangle, and same thing with the NASDAQ as well. We are still inside this potential bear camp, and we'll continue to monitor whether the NASDAQ breaks to the upside or if we get a rejection. If we do break out to the upside at 13,200, like I said, is going to be that level for the NASDAQ, and S&P 4,300 is the one to watch. Now, talking about Apple, I did a video on Apple earlier today, so make sure they do check that out. 29 times earnings. I'm looking forward to kind of reading some of the comments from that video, but 170, almost 170 is where it's at, and of course trading at a very, very expensive valuation with respect to its forward, futuristic growth rate over the next 5-10 years. With that being said, it is one of the most, competitive and one of the most safe and one of the most successful companies out there. So no doubt people want to concentrate their portfolio around Apple because it is safe in all these uncertain times. And it's got a lot of cash, to laying around on its balance sheet. So it's relatively safe at the moment. So I understand the sentiment behind it, but it's just the valuation seems a little bit too out of reasonable assumption, so to speak. So resistance is going to be at 177. So that's the level to pay attention to ahead of the earnings on Thursday. Support level is going to stay put at 158 all the way down to as low as 140 and down to $122 per share for Apple. Talking about Amazon here also pulling back, so coming right back down. This right here was a resistance, the lower high, which we are still getting rejected at. I had to adjust this lower high because of the points where it ended up, and this right here again is going to be the resistance, and we are still fighting off that resistance for Amazon at the moment. So if it does end up selling off even more aggressively, the next support of course is going to be at $83-$84. We're going to potentially be back at that level if of course we continue to see some more weakness for Amazon, but this right here is going to be a very, very important level of support for Amazon. Talking about Tesla, and Tesla on the day was down about 1.5% here, and selling off down to 161, 162. we're still getting rejected at around 165. So this right here is a resistance that we have talked about for Tesla. And you can see that we broke down. We tried to push right back up on Thursday and Friday. Again, we didn't quite see that continuation or that follow through today. Instead, we started to pull right back down. So we do still have these fib retracement levels. So 50% fib retracement level is where we're at the moment. And the lowest I could see from a technical standpoint, Tesla get down to, at least in the short term, is going to be to fill this entire gap and down to that 61.8% fib retracement level. That's going to be down to 145, closer to 146 for Tesla. So that's going to be the level to watch, and resistance right now still stays put at 165 to 175. Talking a little bit about NVIDIA. NVIDIA on the day with a massive break to the upside, right? Huge momentum, lots of volume, and up over 4%, almost up to $290 per share. So this right here is going to be that resistance. We are inside this red rectangle right now. You can see that we have gotten rejected at that level in the past. We were exactly at this level from back in March of 22 at close to 289, 290. So what happens from here is the real question. Do we get a further breakout? You know, given how strong NVIDIA has been, it's very possible that we see another breakout to the upside, and the next resistance and target for NVIDIA is pretty much going to be all the way up to 347. That's going to be an upside of maybe another 12 to 15% for NVIDIA. About 19% for NVIDIA, and 347 is going to be that next potential target if it can break out from this 290, 292 range, right? This is exactly where we got rejected last year in March. So again, that's going to be the real question, whether we get a breakout from this or not. I mean, for me, $700 billion valuation is too high, too freaking high for NVIDIA. But hey, who am I, right? It's just, it's crazy how high in terms of valuation that it trades at. And I wouldn't be surprised if it's back over 100, 150 times earnings very soon. So, you know, something to pay attention to. And of course, resistance is going to be at $347. That's going to be the target. And right now, we're just kind of battling through that resistance at 290. Next up, we've got Advanced Micro Devices and AMD here. Red candle on a green day, so not as bright as NVIDIA, unfortunately, but still consolidating sideways. They've got earnings coming out, I believe, tomorrow. So tomorrow after the bell. I've already done a video on AMD, so make sure that you do check that out. But my fair value and support sits at $78, $77. So this right here is going to be that level to watch. And I got a comment from somebody in my AMD video that, you know, it's trading at 150 times earnings. It's too high. It's not. It's really not. I mean, that based on the gap earnings per share because of the Xilinx acquisition and the fact that AMD had a lot of they had a intangible amortization of assets. So that was one of the reasons why the earnings were lower. Both operating and net income were lower. But on a non-GAAP basis, once you make those adjustments, the earnings per share was dramatically higher. In fact, they grew on a year-over-year basis in 2022. And as a result, their P multiple is nowhere near close to the levels we've seen for NVIDIA, or even at 100, 150. It's actually a lot lower because of those non-GAAP earnings per share. So that's something to keep in mind. And for AMD, like I said, $77, $78 is going to be an intrinsic value price based on some reasonable growth assumptions for the future for the next 5 years for this company. Talking about PayPal, and PayPal here on the day was just again very much sideways, still getting rejected here. So this right here is a level that we've been struggling at for quite some time. That's a lower high. It's kind of been in this descending triangle. So again, support level is going to stay put at 67. My fair value at $70 with a resistance at that 200, 300 SMA, $80, $81, all the way up to $87. This right here, another really important resistance to watch for PayPal. Talking about Square, and Square also struggling here, down about 1%. So coming down to that level of support at $58, $59. So that's really what we are going to be paying attention to. So if you do get a breakdown below this level, then the next support is going to be down to $52, $53. And I would be very much interested in taking advantage of a potential swing trade opportunity for Square very, very soon here. Talking a little bit about Meta. And Meta on the day was actually very positive. It was green, another 1%, getting up to $240, $243. And this right here is the big gap that we need to eventually fill in. And you'll notice that today the low was 236.46. So we've talked about how this right here is going to be that support, right? So we gapped up, and this right here is the support for Meta at the moment. And of course, seeing a lot of continuation, a lot of momentum to the upside for Meta. Once again, pushing up over 1%. So this right here, 248 to as much as 289 is going to be that level to watch for Meta. We're, a little bit over $600 billion in a market cap. And it's just crazy the drastic difference between Meta and Nvidia. Nvidia is now worth more than Meta at over $700 billion at, I want to say, at literally 1/5 of the actual revenue. And earnings are even lower compared to what Meta generates. So it's absolutely mind-boggling with Nvidia's valuation and how high it actually trades. That's just a little bit of a comparable analysis there between Meta and Nvidia. But nonetheless, Meta also on a very nice move to the upside. So next resistance, 247 to as much as 290. That's the gap that I'm watching for this company. Now, Netflix on the day continues to drop here, 1.75%, still inside the context of this symmetrical triangle. So you can see the lower highs and the higher lows, and we continue to trade inside this symmetrical triangle right now. And if it continues to coil inside this symmetrical triangle, there might be a bigger move coming for Nvidia very soon, where it does break out or break down. These symmetrical triangles, they are very much net neutral in terms of bias or directional move that they can eventually break out or break down to. So I'm going to wait for the price action to develop. Once the breakout happens or breakdown happens, that's when we can establish a much better strategy on where Netflix is potentially headed in the future. Support level is going to stay put down to 275, resistance all the way up to 370s for Netflix. Talking about Google, and Google here, once again, consolidating sideways, getting rejected at 108, 109. So that right there is going to be that resistance to watch, and we're really just trading sideways. Very, very flat day for Google. Talking about Microsoft, also pushing higher, but coming up to its resistance at 312. So that right there is going to be that level to watch for Microsoft. And right now, support level at 292, very similar to Nvidia, trades at a very expensive valuation. So not for me at this price. And Shopify also just really consolidating sideways at the moment, down about 2.5%. I would be a lot more interested at 41, closer to $29 for a potential short-term swing trade. But we've got earnings coming out for Shopify later this week, along with Apple on Thursday. So we'll take a look at what the company reports in terms of earnings and then evaluate this company once again. So I hope you guys enjoyed this video and a complete update on the markets. Let me know your thoughts down in the comment section below. We've got a big Fed meeting coming out on Wednesday, and of course, Apple earnings on Thursday. As always, make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below. You'll get access to all the private live streams and the day trading alerts. The first week of the month is the best time to join. It's always happy investing. I'll see you all in the next video.